Hello and welcome to Explain It to Hope, our Friday segment where we talk about common real estate questions and get answers from our in-house experts. We've got Mike back in with us today and Craig Lehman, as usual, our recurring guest. Okay, so today we're going to talk about something that's really beyond me personally. Can y'all explain interest rates and their effect on my mortgage by any chance?
Well, sure. I shouldn't do this because Mike was a mortgage broker for 20 plus years, but I'll start. What we're seeing in mortgage rates and interest rates right now, historically low. They've been hovering around 3% or below 3% on a 30-year fixed mortgage. So what that means essentially to a home buyer that's going to get a mortgage is their buying power is increased. Most people buy homes like they do cars on how much their monthly payment is, if they can come up with a 20% down payment. So what you're seeing people having the ability to buy a more expensive home because they can afford it. As interest rates move up, that changes. This week, I think interest rates are just slightly over 3%. They've gone up to 3.18.
Yeah, national average, right?
But that's the gist of it from my perspective. Mike can add to that.
Yeah, so interest rates are important from the affordability factor, which is what Craig was saying in another way. And as interest rates go up, that means your housing payment goes up. And I've talked about this before on other broadcasts, but a 1%, this is really important. I had a client the other day say to me, well, if interest rates bump up an 1/8 or 1/4%, it's really not that big of a deal. Well, actually it is. A 1% movement in the interest rates makes the same mortgage amount go up 13% in your monthly payment. To me, that's very important because people are complaining that, the appreciation level of real estate has been 18%, 13%, which is fine if you're moving up because you're moving your equity from one property to another. But if you're trying to get into the market, it makes real estate doubly expensive. So for that first-time home buyer, where it's been a real challenge for folks during the last year because of the competition, prices have gone up, but now if mortgage rates start to go up, then they're double whammy. So yeah, mortgage rates are very important and they're very impactful on the market.
I think that makes sense. So essentially, if I have in my brain, this is what I want to spend on my mortgage each month, if the interest rate is lower or higher, it's going to change the ultimate price of the house I can afford.
Right. Yeah, so if let's say my top budget is $300,000, that's what I can afford from a lender, and interest rates pop up, say 0.5%, that means the price of the house has to come down 6.5% so that my mortgage payment stays the same. So I go from a house that could be $300,000 down to one that would be $280,000. But the appreciation of houses is going the opposite way. Right. So rising interest rates will impact the buyer market. Yep, for sure.
Well, I think we can say it's explained. Thank y'all so much, and we will see you next time on Explain It to Hope.
Thanks, Hope.
Thanks, Hope.